Good morning. For Traders Exclusive, this is George Kachuk with RCM Wealth Advisors reporting to you from the CME Group trading floor in Chicago. Well, let's talk about the equity markets. Here we are, the S&P hitting new highs, the Dow Industrials above 18,000 also closing in new highs, and all the other markets performing very well. And by my estimation, it looks like this trend may continue. Specifically, this is still the most hated rally. S&P's breaking into new highs, and most global fund managers are still underinvested with their largest cash position. And this is what may drive the market further. Also, we have to keep in mind that economic data, although we keep getting that same slow growth, doesn't seem to be any signs of a recession. Whether we look at housing, GDP growth, unemployment, everything's pointing to an economy that still continues to grow, and this is what may drive the market further. Now, over the last few weeks, what we talked about was, buying the dips, seeing, expecting this market would do pretty good. However, anything that broke out didn't really move. That situation may be changing now, and there's a lot of technology stocks moving higher. So it might be a time where you do want to be a little bit more aggressive, take a chance, and buy some stocks that are breaking out. So, and this is pretty much validated when we see technology stocks like Amazon at new highs, Facebook recovering its 50-day moving average, a stock like Nvidia at new highs, tells you the technology sector is ready to run. So one new IPO that we're accumulating shares of now is called Acacia Communications. That symbol is ACIA. Now, before you put any trades on in this company, you may want to consult your financial advisor, see if this trades for you. But let me tell you why we like the company. It has a 3-year earnings per share growth of 237%. Has a 3-year sales growth rate of 79%. Estimates for 2016 in earnings are calling for an increase of 77%, and for 2017 an increase of about 5%. Now also for next quarters and for the first quarter reporting since going public, analysts expect earnings to come in at an increase of 36% and sales at an increase of 48%. Now that's quite a bit of a slowdown from its triple-digit growth. However, that's a tough comparison. That's still great growth. And also it's believed that Acacia, they're actually in a high-speed networking communication type devices. That's a $3 billion market possibly to them by 2019. Their profit margins are a little bit below, gross profit margins, a little below 40%, and that's expected to increase by 2017 to about 48%. So some good growth going there. Now technically, Acacia broke through back in May when it IPO'd, a short IPO base, broke through the $32 level, broke higher, ran up, formed another base, broke past the 43.10 buy point, and then when the Brexit panic set in, came back down to the 35 area, and last Thursday and Friday came back into that buy zone between $43 and $45. Now this morning we're a little bit above that, but if that stock were to come in at between $43 and $45, that is a place where the aggressive investor may want to nibble at shares. That's a very volatile stock. There's only 9 million shares in the float. It's still under $2 billion in terms of market capitalization, so it's going to be volatile. So as always, like I said, consult your financial advisor to see if this is trade for you. Expect moves of at least 10% almost on a daily basis, so you better position your size accordingly if you're going to try anything like this. So again, this is a very aggressive play, and the reason we're doing that, when the market breaks in a new high, if stocks like these continue to run, they're basically a little bit of a momentum stock, but they have some solid fundamentals behind them, maybe where you can get some pretty good returns. But again, consult your financial advisor to see if this trade is for you. So, as always, let price and volume be your guide. This is George Kachuk with RCM Wealth Advisors reporting to you from the CME Group trading floor in Chicago.